and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Auto and finance stocks power a rally on D Street. Sensex up 700 points, Nifty up close to 200 points. Adani Group turns laggard after MSCI's decision to lower the free float into counters. Paytm jumps nearly 5% in trade today, regains the 724 rupee level after 7 months. Investors celebrate after the company shrinks its losses. Is the fintech share a good buy now post numbers? Aviation sector regulator DGCA asked Go First to stop selling tickets till further notice, even as the budget airline asks the bankruptcy court for an urgent decision on moratorium. Central government's ONDC turns disruptor in the food delivery market, restaurants using it to deliver food. Heavy discounts poses a big threat to aggregators Swiggy and Zomato. Oil Ministry's Energy Transition Panel recommends ban on diesel four-wheel vehicles in big cities by 2027, says all new registrations for city delivery vehicles from next year should be only electric. It's the latest big tech idea of the Modi government, which is already causing jitters in the food delivery business. The Open Network for Digital Commerce, or the ONDC, is meant to give retailers a platform to sell products online. But what ONDC has inadvertently done is to deliver food at rates which are much more competitive than either Swiggy or Zomato.
The two startups which revolutionized food delivery in India, linking restaurants to customers, becoming generic names in the process. But Swiggy and Zomato have their own competition now. Competition which threatens to erode their margins, uncut their offers and wean away customers who have become so dependent on their services. The mega disruptor is ONDC, a government-led digital superhighway for small retailers to reach their customers without having to pay middlemen or increase costs by giving commissions to third parties. Several food brands have already onboarded the ONDC platform. Interestingly, it was customers who discovered the huge price advantage ONDC is offering. This Twitter user pointed out how a McDonald's burger was 60% cheaper if ordered via ONDC. Another user also ordered from the fast food brand and found not only was the bill lower, but ONDC was not charging for delivery. A customer in Vizag also tweeted the advantages of ONDC after ordering food via the government-owned platform.
ONDC is in that journey is to disaggregate e-commerce and allow small suppliers or even big suppliers like Nestle and small merchants to be on the grid. And there are two interesting use cases that have been launched in the last 1 month, which I'll just take a minute. One is called PIN code. PIN code is launched by PhonePe. And it's a hyperlocal commerce product, which essentially acts as an aggregation and coordination layer on top of small retailers. Another is something called Namma Yatri, which is changing mobility where you can order an auto rickshaw and then you pay directly to the auto guy without paying any platform in between.
Business Today TV took a look at the prices and discounts being offered by restaurants listed on ONDC platform against those on the Swiggy and Zomato apps. The entire Taco Bell menu was at 15% discount on ONDC, while the other delivery platforms offered maximum discounts up to 120 rupees. Burgers from Wendy's were at 20% discount on ONDC, while only Zomato offered a conditional discount of 200 rupees. Barista snacks and beverage were at 28% discount on ONDC, with only Zomato offering much smaller discount. Krispy Kreme donuts had a flat 8% discount on ONDC, while the other delivery platforms had smaller offers. However, the reach of ONDC is still a fraction of the market Swiggy and Zomato service. It has 29,000 sellers with more than 3.5 million products listed, ranging from food to clothes, cab rides to movie tickets and groceries to electronics. Where ONDC has a leg up on Swiggy and Zomato is delivery charges and commission. Currently, ONDC charges commissions which are half that of the other delivery apps, enabling restaurants to give larger discounts and in some cases absorb delivery charges as well. What also sets ONDC apart from Swiggy and Zomato is its willingness to share user data with restaurants. This has been a sticking point for restaurants who have accused aggregators of not sharing names, addresses and phone numbers of customers. Bureau Report, Business Today Television.
Go First, which has cancelled all flights this week, is refunding its passengers not with money but with credit notes. This has caused concern among passengers, especially given the uncertain future of the budget airline. The Wadia Group-owned airline has meanwhile approached the bankruptcy court again to urgently pass an order on its moratorium plea. Go First has said it's facing difficulties with aircraft lessors restricting it from doing maintenance work on its aircraft. For more on this, we're joined by BTTV's Karishma Sudani. Karishma, what's the latest with the Go First matter pending with the NCLT?
Well, right, the management of Go First has reached out to NCLT again, and this is despite the fact that NCLT has reserved its order. The management of Go First wants NCLT to pass its plea of moratorium that it has issued in order to continue with its operation of domestic aircrafts across the country. As we know, it was last week that Go First had submitted this plea where it did mention that more than 50% of its aircrafts are grounded, with only 26 of them functional. In fact, the lessors have also intervened, asking to take back 20 of these aircrafts, which could disrupt operations of Go First in the coming days in case it plans to resume.
Also, what does the issue of credit notes mean for Go First passengers, Karishma?
Well, in terms of refund, the latest update that's been coming is that Go First has submitted a response to the DGCA also that they will be processing the refunds. They've been started to issue credit notes to its passengers. In terms of data and amounts that coming, it's more than 70,000 passengers who've been impacted and an amount of 350 crores that has to be refunded for the flights that were cancelled up to May 9th. Of course, after May 9th, the latest update has been that the suspension has been taken forward until May 12th, and in case NCLT does not accept its plea, the lessors may take back the aircraft, which could further derail plans of Go First to resume its operations in the country.
All right, Karishma, thanks for joining us with all the latest there on Go First. After a severe sell-off on Friday, bulls were back and how today on domestic equity indices settling sharply higher thanks to a host of positive global and domestic cues. Auto and financial sector shares led the charge, with the Sensex surging over 700 points and the Nifty also up close to 200 points. Top gainers today: IndusInd Bank, Tata Motors, Bajaj Finance, Bajaj Finserv, ONGC. While on the losers' end were names like Coal India, Adani Enterprise, Sun Pharma, Dr. Reddy's and Britannia. Let's take a look at some of those key earnings and what the scorecard is looking like. With the earnings of 26 Nifty companies having increased by 10% year-on-year. This boost also largely driven by financials. My colleague Sakshi Batra spoke to Siddharth Khemka, Head of Retail Research at Motilal Oswal, to find out which stocks one should now look at buying. Listen in.
Halfway through the mark, March quarter earnings have largely been better than expected so far as we speak. Siddharth, your own sense, we've seen 26 companies of the Nifty 50 already report their earnings. What do you make of the earnings so far reported as far as the Nifty companies are concerned? And what's the kind of improvement that you've seen here on the earnings?
Yes, Sakshi. So very critical factor for the markets has been the earnings season. This is the final quarter of the financial year, and we hit right at the middle of the earnings season with 26 out of the 50 Nifty companies reported their earnings as of 4th of May. So that is last week. What is also important is that these 26 companies constitute 70% of the weightage of the Nifty. So the bulk of the earnings are in. And what do they suggest? They suggest that mostly the earnings have been in line with expectations. And so to give you just few numbers, that this entire, so we looked at two numbers. One is the number of companies that have come out with coverage from our overall coverage universe, as well as from the earnings from the Nifty segment. So if you
Yeah.
look at the profit from the 26 Nifty companies that have declared, the net profit has gone up by 10%. So they have grown by 10% compared to our expectation of 7%. So that is
Okay.
clearly better than our expectation. And that has been mainly fueled by three sectors, which is largely by the financials, both on the, you can say, banking as well as on the NBFC side, then from the automotive sector, and to some extent from the IT sector. So these three
Okay.
sectors have largely contributed to the growth in the earnings. And on the other side, on the flip side, metals have something that have dragged earnings, largely driven by Tata Steel, which saw a sharp plunge of 83% in its net profit.
Mm-hmm. Okay. Great that you put out the context at large for all our viewers to really understand the broad picture of which are the spaces that have performed better and which are the spaces that have been laggard so far. Let's break it down further for our viewers as well. In terms of the Nifty 50 companies per se, which have been the best performing companies so far as per you in terms of the earnings?
Yeah, so if you look at the Nifty 50, the heavyweights have done well so far, and that is where the market is getting comfort from. So if you look at the five companies that have contributed bulk of the growth, you have Reliance, you have Axis, you have ICICI, you have HDFC Bank and TCS.
Shares of Paytm surged nearly 5% today after the company significantly reduced its losses for the quarter ended March. The company's consolidated net loss narrowed to 168 crore rupees. My colleague Sakshi Batra spoke to Avinash Gorakshakar of Profit Mart Securities to really find out whether investors should re-look at buying into Paytm post the robust Q4, or will it still take a while for those shares to regain their lost glory.
Paytm, for example, has reported robust set of numbers this time around, a jump in its revenues as well, a narrowing of the losses this time. We've seen the stock react about 5% up in today's trade as well. Your own sense of Paytm, the earnings that have come about from quarter on quarter. Last time we had seen EBITDA turning positive. This time, what is the difference? Is there a considerable shift on the upside?
Yeah, I think one good part is that revenue growth traction continues to be very strong, and plus operating profitability even before the ESOP charge has been very strong. More importantly, the net losses have started declining, and now the management is pretty confident that very soon, Paytm will become a free cash flow positive company. Of course, for that to happen, it might take a long time, but I think the first targeted number, Sakshi, would be September 23 numbers, when the management had earlier predicted and forecasted that they would become EBITDA positive. So I think the momentum seems to be proper. I think that's the reason the market is very happy that finally this company has been delivering numbers which are as per the investors' expectation, and we expect this momentum to continue. So a good set of numbers, and I think this 5% upside which you have seen is basically a thumbs up by the market looking at the strong operating numbers.
Right. Some of the brokerage houses have actually come out with their reports post these numbers, and they are predicting, a target price of over 1100 or so. Is that a realistic expectations given the kind of challenges that the company may still face at this point in time? Despite this 5% move, is this an opportune time that investors should bet on Paytm for further upside from here?
I would say that, at least I would wait for the entry of Jio Financial, because Jio Financial is going to enter into all these areas which the company operates, and obviously that would lead to significant competition going forward. So I think it's going to be a little tougher, once Jio Financial is properly listed in the market. But clearly, I think Paytm has got a very large market share in the payment business. They have a lot of cross-selling opportunities. So I would say that anybody who's holding on should at least keep a 2 years perspective. Giving a target price, Sakshi, would be difficult. But yes, I think definitely longer-term prospects look good.
But we have seen the company definitely recover from a lot from the lows as well. But despite that, we are seeing that the company is still about 60-65% away from its all-time high levels as well. Will that be a far-fetched to see even now?
I think it will take some time, because clearly my sense is that even as of now, the company continues to incur cash losses. It's EBITDA negative. So I think only once the company becomes EBITDA positive, and obviously at a later stage when the management pretty confidently has mentioned in its press release that it intends to be free cash flow positive. I think these are very positive statements, Sakshi. But I think you'll have to wait for some more time before you see actual results.
Scam calls are on a rise, with scammers now targeting WhatsApp users, calling through international numbers at unearthly hours. Users don't even have to answer these phishing calls for their data to be vulnerable. A missed call is enough. These calls are made using artificial intelligence and don't depend on any human intervention. Amidst this, how can you safeguard your data? Here's a report by Business Today TV's Rachna Dhanrajani.
Have you been getting unknown calls from international numbers on WhatsApp? Well, then you need to caution, because these calls you should not even think of answering at all. Getting calls from numbers that start with +67, +41 or any international code that you do not recognize, it's not safe to answer them, because these are scam callers. Now, scam calls are a form of fraud where criminals attempt to trick people into giving them money or even personal information. But what's gotten worse is that now you don't even have to answer these calls. They simply get away with a missed call. These calls can take many forms, including fake tech support calls, phishing scams, robocalls, and the latest one being AI-generated missed calls. The minute you answer these calls, or even if you don't, all the data stored on your phone or cloud becomes immediately vulnerable. The data could range from your Aadhaar, PAN details and biometrics to saved debit card and credit card information. In recent years, we've seen a significant increase in the number of scam calls reported by individuals and businesses alike. There are several factors that have contributed to this rise, including technology advancements, changes in consumer behavior, and the ease with which scam callers can operate across international borders. Well, international borders, these scams have now moved away from just Jamtara. According to a report by local circles, based on a survey, it was revealed that about 64% of Indians get about 3 to 4 spam calls every single day. The survey also found that about 95% of these individuals who have registered their numbers with TRAI's DND list still continue to receive these spam or scam calls. Yet another report titled Global Spam Report 2021, Truecaller, had ranked India as the 4th most affected country by spam calls. But why is that? Why are we so vulnerable? I spoke with a cybersecurity expert, Mr. Amit Dubey. Thank you so much for joining, Mr. Amit Dubey. I'm going to start by asking that what are these kinds of scams that we're coming across? Even if you answer the call or you don't, your data is still very vulnerable. So how would you suggest that we safeguard our data?
You need to do 3 settings in your WhatsApp. First, you should disable, there's a feature in WhatsApp that you can block any call which is coming through unknown numbers. So if you have not saved that number in your phone book, if it is not in your contact list, and if you being targeted to those numbers, it will automatically block. So you can go to your WhatsApp settings and you can block those numbers. There is a possibility.
India is the 4th most affected country by scam or spam calls. 64% of Indians get 3 spam calls daily. So where do the scammers get your phone number from? That's one question that everyone wonders after they get such a call. The answer is slightly more complex than we think. It starts from the time you sign up onto a website or share your phone number at a store in order to avail promotional offers or deals. Your data gets stored on the company's database. Given the weak tech infrastructure and missing laws to protect this data, a scammer can easily access your data. Remember when Domino's India had a data breach? The scammers were able to get data of over 18 crore people. And there have been so many other attacks over the past couple of years. In terms of cyber attacks and data breaches, India is ranked the 2nd most vulnerable country in the APAC region, according to a Palo Alto report. In the event of rising calls and data breaches, a data protection law is the need of the hour. Proposed for a couple of years now, the Data Protection Bill is all set to be tabled in the monsoon session of the Parliament. This bill will potentially safeguard data, and that will take down the scams. But in the meantime, make sure you protect your data by enabling all the settings that we just discussed.
And here's what else is making news in the corporate world. Hyundai has officially revealed its latest mini SUV, the Exter, and opened bookings. The car is based on the Casper model sold in South Korea, and it's Hyundai's smallest SUV in India. Growth equity investor General Atlantic is expected to invest $1 billion in India. According to news reports, the firm is betting on businesses built around Prime Minister Narendra Modi's push to expand financial inclusion and increase technology usage. Make My Trip is introducing voice-assisted booking in Indian languages. The travel portal is adopting generative AI, for which it has collaborated with Microsoft. The feature has been embedded into the landing page of the platform and has to be activated before use. State-owned Bank of India posted strong Jan to March numbers with consolidated profit more than doubling to 1,388 crore rupees. Importantly, the bank is considering raising 4,500 crore equity capital this year, which will bring the government stake down to 75% as mandated by SEBI. Business Today TV managing editor Siddharth Zarabi was earlier in conversation with the bank's MD and CEO Rajneesh Karnatak. Here's an excerpt.
Good set of fourth quarter earnings. Can you take us through some of the key numbers, including net profit, which is about 1350 crore versus 606 crore on a year-on-year basis?
Yeah. So bank has shown a very good performance in this financial year, March 23, both on Q-on-Q basis and also on the year-on-year basis. As you are aware that our net profit has gone up by 18% and we have touched 4,000 crore of net profit during the year. As far as the operating profit is concerned, we have touched 13,000 crore. We have crossed 13,000 crore of operating profit also with a growth of 33%. As far as the NIM is concerned, we have closed the NIM at 3.01%. And it was based on a healthy net interest margin, interest income, which grew by around 25%. Our interest expenses, even though there has been increase in the cost of resources, our interest expenses have grown by only 13%. What it has done is that our NIM, net interest margin, has grown by 44%. So which has helped for improvement in the overall NIM for the bank, both on the quarter-on-quarter basis and also on the year-on-year basis.
Mr. Karnatak, I want to talk about the NPA position. What is the picture as far as NPAs are concerned, and what are your plans and strategies in this regard to further see improvement in this regard?
Yeah, so as far as the NPA position of the bank is concerned, we have closed the gross NPA amount at around 37,000 crore with a percentage of 7.3. As far as the net NPA is concerned, we have closed the amount at around 8,000 crores with a net NPA of 1.7. So that is a good number, and both the percentage terms, gross and net PA, amount wise and percentage wise, it has come down. So far as the guidance is concerned, for gross NPA we are giving a guidance of 6.5%, and for net NPA we are giving a guidance of 1.3%. So as far as the strategy is concerned, we have a very strong strategy of recoveries, wherein OTS would be there, other kinds of recoveries would also be there. Another thing is that lot of stress will be given on the upgradation of accounts which have fallen to NPA during this financial year and during the current quarter. So upgradation will be another strong strategy which is there. Apart from that, we are monitoring our portfolio, SMA portfolio, very closely. So we also feel that the slippage ratio will also improve and there will be less slippage during this financial year, leading to lower accretion of the gross NPA numbers. Apart from that, as a part of strategy, we will be doing some write-off also. Overall, with this, the gross and net NPA is expected to come down in this financial year.
That's it for the news, but we leave you with an action-packed clip of Meta founder and CEO Mark Zuckerberg performing his best jiu-jitsu moves as he recently won his first gold at a tournament. The tech tycoon can be seen battling his way out of a hold and finally overpowering his opponent for his guerrilla jiu-jitsu. The billionaire began training for mixed martial arts last September. Last week, he also took up sewing as a hobby.